Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and we had a test and a break yesterday at the blue line there, the 9-day exponential moving average, but bulls brought it right back, brought it back above, and we end up closing exactly where we closed on Friday, which is at 39.25. So we remain overbought based upon the 45-day pivot, but at the same time, we've been churning up here now going on 8 sessions. And the overbought condition may be keeping a cap, so to speak, on the upside for the moment. But the fact that the numbers stay inflated, I'm beginning to think, and a lot of my work this weekend was on why are we up here, why are we over the 45-day pivot, and why is it so sustained? I think it's a byproduct of the deep low and the violent move off of it. I mean, we're stuck with that 1813 low, and that's why I always say, a pivot, any particular pivot, is just one tool in a very large toolbox. And what we've been doing in the room is we've been long and we've been short. We're trading this stuff. We're not, we're not making any big bets up here. And I think that you need to be doing the same. This is a time, I said last week and I said in the webinar on Thursday, this is a time to be cautious. If you are long, you need to be taking profits up here and looking to add back on these dips. We dipped yesterday. We did 25 quarter. We tested that 26.75 double bottom from last week, and the bulls had a chance to take it out and head lower, but they couldn't do it. So at the same time, on the short side, every time we get above 37.39, you can sell that and you can cover it for a solid 4 to 5 handles every time out. At least that's how it's played for the last 4 or 5 sessions. So it's definitely a market to be trading. It's a market to not be greedy. And what I mean not be greedy, I mean make your trade, make your handles, get out of your trade. Don't say, okay, this last trip up to 39, this is it. So that's it. I'm a bear. I am short, I am a hold, and that's it. That's not the way to handle this because we have floated up here for too long. And a break over 43.44 targets the upper band. And you have to respect that. At the same time, if you're a long, you can't say, well, the bears can't do anything. So I don't care if we're on the highs. I'm loading up right here. Well, I'd be careful with that because 43.44 is a pretty big area. Every one of these moves has brought us down at least a little bit. And if the Russell is any indication, although it's bouncing a little bit this morning, if the Russell is any indication, it looks like we're going to break the 9, and the Russell's been leading this whole way. We're going to break the 9 and probably go down and test middle band. So where would a middle band test occur on the mini? This moving average is a moving average. It is shedding these lower prices all the time. As it does that, its rate of ascent is going to increase. We still have the floor at 20 to 21. My inclination is that the test will be at 20 to 21 and could potentially also be a test of the middle band at the same time. And, churning these prices up here does nothing to resolve that. So we're in this 25 to 43 type trading range so far. And until somebody breaks out hard above or breaks hard below that range, you need to just be trading it, taking your profits, and then looking for the next trade. All right. Everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well.